Hey Harvesters, and welcome to the channel where we run simple and straightforward options trading to generate income. My name is Matt, and in today's video, I'm going to talk about three different things. One of them being the trades I executed for December 3rd. The second being what I plan on doing for December 4th. And then lastly, we're going to take a look at the project State of the Union over the last 8-month period. We're going to hit some high-level overview stuff, and who doesn't like looking at numbers and seeing them grow over time? I sure do. But let's talk about what happened for December 3rd. My account is at an all-time high again. My Tesla shares were blown out of proportion right now. Beginning of the trading day, they were at 430. Now they're at 445. And that's exactly the whole point I was talking about with my spring analogy during the red market. You're supposed to buy shares during a red market. And then once we let go of the spring and the market was rebounding, we're making a ton of money on the way up. And that is evident with what is happening with my account over the last week period, over the last month period. So let's just take a look at what's happened over the last week period, up 3.62%. That's $8,000 over the last month period, $13,000 over the last 3-month period, 3 months, $46,000. Oh my God. And that's 25%. So I'm pretty stoked about the account's performance. But let's talk about the big number that we're seeing here. The all-time high is at $229,221.58. I'm going to take this number and I'm going to plug it into my spreadsheet. And then we're going to cover some averages and some percentages. So you guys remember this number. But let's head over to the spreadsheet and let me talk about the trades I did run for December 3rd. All right, guys, today the trading wasn't terribly exciting. I already mentioned I made $184 of premium today, made no appreciation gain, and let's dive into it. Most of the trades, like I said, I either executed on Monday or on Tuesday, so they're all currently active. I ran 2 cash secured puts today, one on the QQQ, one on the SPY, and let's dive into it. Today, the QQQ opened at the 619.58 and then closed at the 623.53. So when the market opened, it actually took a little bit of a dip in the pre-market and when the market opened. So I was able to bag a cash secured put at this 616 strike price and made $95 of premium. And then the market did end up rebounding. Like I said, QQQ closed today at the 623, so it's nowhere near getting my cash secured put assigned away. So if you guys are not familiar with cash secured puts, the market has to go down for you to get assigned the share. So that means I'm going to buy the shares versus the covered call. You have to go up to the strike price, and then the shares that you do own get taken away and are sold to the investor that paid you that premium. So just a little bit of nuance if you're not familiar. And then I ran a cash secured put on the SPY. SPY opened at the 680.57. I chose a strike price of the 678. This was a delta of about 0.25. And I chose a strike price closer to where SPY was trading because SPY doesn't move as volatile as QQQ. QQQ, you might have to be like $3, $4 away for the shares not to get assigned. But for SPY, that could be a little bit different. That's like $2 or $3, and it doesn't move as parabolic as QQQ, but made $89. And guys, you would think, oh, Matt made only $184, but I like playing the calculator game where we pull out this beautiful calculator, do $184, and then you multiply by how many trading days in a year, and that's 250. Guys, that's an extra $46,000 a year. So now couple that with what I made yesterday with my extra cash secured or collateral secured puts. That was $127. And I think the day before that, what was it? Like $150. So if you average it out, guys, we'll say a nice even like 37,000. But if you do that over a 10-year period, guess what? That's $370,000. Now you're at an account like this, and then you're making good money. And depending on your debt situation, you could actually live off of that money off of $300,000 based off trading like this wheel strategy, this covered call strategy, this cash secured put strategy. Now imagine doing that for 30 years, right? $37,000 times 30 years, $1.1 million before taxes. And that's you not even adding a single dollar into the account. Now you start throwing in more money, and then you start having better wins. And you have days like I do where Monday, almost a $1,700 day, Tuesday is a $1,600 day. And then we throw in a little bit of cash secured put premium in between while some of my options are still active. Guys, this is the path to financial freedom, and I know we're all capable of getting there. This strategy isn't that difficult. the biggest barrier to entry is having enough money to run 100 shares of a good investment. Outside of that, this is cruise control, and this isn't that difficult to execute. Yeah, guys, made $184 today. That's really it. Nothing really more to report here. Let's head over to the other side of the spreadsheet and talk about the project's State of the Union. Moving up here, let's go. All right, guys, like I said, December 3rd, $184 in the bag. Count is at an all-time high at $229,332.96. No money was added since November 28th. If we look at the total amount of premium I've generated in the last 8 months of my own trading, guys, we pushed the ball past the $77,000 mark. We're at $77,141.18. Guys, we're well on track to hit $80,000. Starting today, we still have 4 full weeks left in December so that we can lock in as much premium as possible. Guys, it is very likely, if we're looking at my averages, for me to hit maybe another somewhere between $6,000 and $8,000. So this could easily be 85. Maybe if I'm lucky, if I trade really well, maybe $90,000. That's a little too optimistic though. But if we look at the percent based off my initial investment is about $152,000 from money I brought over from 2024 and cash I put in, $152,000. Guys, to make 50% return is absolutely wild. Of course, I'm going to have to pay taxes on this $77,000, which I have already been setting aside a little bit as cash, and then some of it I might sell come the new year when there's a green market. Guys, making 50.57% return, we're outperforming pretty much most indexes by double just by running a very simple and safe strategy. So this is crazy. These results are crazy. I still can't believe that this is being as effective as it is. But looking from the days change in value, it's about a 2.6% gain. So I'm stoked about that. Let's take a look at this trade win percentage. When I look at this trade win percentage, there's 2 things that come to mind: is stability and predictability. I'm winning 98.77% of my trades. I had 161 losing days, 2 days that you have to pay the troll toll. You have to pay the learning fee. I didn't roll options the proper way. I have a full-time job. I wasn't able to monitor the market, and I didn't roll them in time. Lost some money. It happens. And then in total, I have traded 163 times just selling options. I would say about 98% of my strategy is running or selling options. And there are times where I do run speculative plays, and I buy options, but that's rare. I don't like to do them often. I only like to run those types of options when an opportunity presents itself. I don't necessarily go out of my way to force a buy option. I just let it come naturally. If some stock like Meta was on super discount, I'll buy an option, buy a leap, basically a year out, wait for it to recover some, and then sell out at a 25% return, 25% gain. And some of the metrics I do track on this channel is the average amounts of premium per day, per week, per month, and the amount of premium per day I'm generating on average about $473.26. If we look at that as an average weekly premium, about $2,268. And then as an average monthly premium, I'm making almost $9,206 a month. Guys, that is more money than my day job. And I'm making that running trades that take me somewhere between, literally it takes me most days 5 minutes to run trades. If I want to like look for something and find something on discount, I'll spend a little bit more time looking at premiums in the morning. But ideally, based off what I talk about, the night prior, like when I talk to you guys, I consider that my harvest plan, a trading plan. We go into the trading morning knowing exactly what we're looking for. We run the trades, we execute on it, and then there's no hesitation when it comes to running those trades. Versus there's some days where market is kind of wild and you're a little bit more hesitant, but most days it's about 5 minutes and I lock in all the money up front. And because 2025, I'm not going to be able to trade for a full calendar year, I decided to project out what a 12-month period would look like. So what did I do? Took the average weekly premium, multiplied it by 52 because there's 52 weeks in a year. We came up with $117,980. From when I started this back in April, I was averaging about a return of like $60,000. But as the account has been growing and I've been adopting my trading strategy, using a little bit more collateral secured puts, cash secured puts, I might use a little bit margin for surging. I'm just feeling out the right strategy. Now it's at almost $117,000, $120,000. That's crazy. And if we look at that as a yearly percentage, that is a 77% return if I were to trade for a 12-month period. Guys, this 50.57% is only 8 months of trading. I will say this with a caveat. I did capture a great bull upside after the tariff time, but there were some turbulent times throughout where, there's a little bit market corrections. So this wasn't like the most easiest 50% return. If you look at QQQ or SPY, it didn't recover that much as what I returned. All right. Now that that is discussed or showcased, let's take a look at what the premium generated for the week is. For the first week of December, we made $3,501. And I will note, as I've noted the last two videos, that we've hit the 4-digit club 13 weeks in a row. Very excited about that. Now let's take a look at the monthly premium. It's going to be the same as the weekly premium because we are still in the first week of December, still $3,501. For the monthly premium, we hit the 5-digit club 3 months in a row, and I'm really aiming for December to also be a 10-digit club. It's nice for me to say that, but I have no control of what the market's going to give me. But the things I can control is how I choose my strike prices, don't sell below my cost basis, and what I'm investing in. Those are the things that are within my power. And then everything else, you just read and react to what's happening in the market. That's really all you can do. Yearly tracker, we mentioned it, guys. We hit $77,000 in 8 months. That is freaking wild. Every time I look at it, it doesn't even seem real, but the beginning of the year, I had $150,000, and then now I have almost $230,000. That's wild. All right, I don't really have much more to say on the spreadsheet portion. Let's head over to Robinhood and let's talk about the trades I plan on running for tomorrow, December 4th. All right, guys, we are back at Robinhood. As we can see, countless pretty much as it is. Right now, my buying power looks a little bit low because in about 1.5 hours, the expirations of my cash secured puts are going to take effect. So all of that capital or buying power will be released back to me. But right now, it's still technically held up and active. But I should have about $154,000 to run more cash secured puts tomorrow. That's exactly what I'm going to do. I'm going to run 2 of them, one again on the QQQ, one again on the SPY. And let's talk about what some of those cash secured puts would look like. Currently using a little bit of margin right now. I'm usually fine using a $1-for-$1 amount of my margin, but I'm waiting for my cash secured puts to get assigned to fill that void. And then once that happens, that will be the $1-for-$1 amount. Because for me, I'm fine with using margin. I'm not really afraid of it. Yeah. So let's head over to QQQ. QQQ last day, pretty good, up 0.25%, a little bit down in the after hours, the overnight hours, about, giving back about half its return. But let's hit trade QQQ options, sell put, because to run cash secured puts in Robinhood, you got to press the sell put button. This is expiring December 4th. Let's take a look at what some of these premiums will look like. QQQ trading at the 622.72. Usually the deltas I like to choose for my cash secured puts are somewhere between 0.2 and 0.3. It just really depends on the premium to strike price that is in that range. And then I'll make that decision based off what I'm seeing in the market. From what we're seeing right now, let's take a look at about $3 away, $6.19. That is a nice 0.21, $71 a premium. This is something I can consider running tomorrow. A nice $6.19 strike price, $71 a premium. That's pretty good. Let's look at what this 620 is going to hold. I like this delta better, 0.26. There's a higher likelihood of this getting assigned, but I do like a higher premium. So maybe tomorrow, depending on what the market looks like, the market is greener and pushing higher, I'll probably choose the 620 strike price. The market is pushing more red, I'm going to choose a strike price further away or further down so I can get a better buying point if it were to get assigned. So we'll read and react. But ideally, if the market stays exactly as is, we'll bag this $90 of premium at this 620 strike price. So that's really pretty much what I look at. I look at the delta, look at the premium, look at the strike price, and that is how I make my decision. It's really that simple. Now let's head over to let's head over to SPY. SPY actually did a little bit better than the QQQ today. Quite surprising. Take a look at the trade SPY options. Hit the sell put button. Head over to the 683.53. That's where the SPY is trading at this time. Let's take a look at what this 680 strike price will hold. 0.19. That's a little bit too low. It's under my 0.2 threshold. And let's be honest, guys, $47 a premium for about $68,000 of collateral usage. Not really a best use case of our money. Let's take a look at what this 681 strike price looks like. A nice 0.25, 681 strike price, $63. I still don't really like that premium, but the higher I go, the higher likelihood of these shares getting assigned to me. But with one of my cash secured puts, I might be willing to put it on the line and risk getting assigned. Maybe we can do it for the SPY. Let's take a look at this 682 strike price. We're at this delta of 0.32, a little higher than I like, but I like this $84 a premium. So for tomorrow for SPY, I would consider somewhere between the 681 to 682 strike price. We'll see what the market gives us tomorrow. If the strike price is green and the market is relatively healthy and good volume, heading in the green bullish direction, probably hit this 682. But if it's going to be heading in the red direction or there's a little bit of a pullback, I'm going to be choosing strike prices a little bit lower. Might choose a 680, might choose a 678, 679. So we will see what the market gives us. I don't like to force anything. I have a plan. I have an idea of what I want to do in the morning. And then based off what the market's giving me, I read and react to that plan. I will say, guys, even though I ran 2 cash secured puts on QQQ and SPY, I still do have a little bit of cash secured put collateral available. So I might consider looking at Oracle or running it cash secured put on Amazon. So let's just do a quick little preliminary analysis of what we're looking at. Oh man, Oracle. The analyst said it was a $200 buying point. Now everyone's like, nah, it's undervalued. Cool. Take a look at what some of these Oracle cash secured puts would look like. So Oracle and Amazon, they're a single stock. So their expiration is on Friday. They're usually week-long options. So I would have to hold this for about 2 days. Right now, Oracle is at this 208.77. I think a good buying point for Oracle would be this $200 strike price. So maybe bagging this $82. Let's see what the delta looks like. 0.17. So there's a really low likelihood of that hitting. See what this 202 looks like. Ooh, this 202.5 strike price looks really good. That's the delta I'm looking for a cash secured put. Bag an additional $131 on top of my QQQ and SPY premium. Guys, that might be a good Thursday. Thursday loading up. So I think that's for tomorrow. I might run it on Oracle. And let's see comparing it. Let's see what it looks like compared to Amazon. Amazon's been a little red today. It's crazy for like a couple of weeks ago. Once it had its earnings, it was like 250s, 260s range. Now it's struggling to be back into 230s. I don't know. I think this stock is severely undervalued. Let's look at trade Amazon options, sell put. Amazon trading at this 232.19 now. And let's look for a nice delta. So for this 230 strike price, making $114 a premium, high delta, there's like a high likelihood of that this is going to hit. $114. Man, that Oracle one looks better. A little less capital, better delta, better premium. There's more upside with Oracle right now, to be honest. Versus, let's see what this 227.5, 0.18, $57 a premium to tie up 20,000. I think for tomorrow, I might run a cash secured put on that Oracle at that 202.5. If the market were to stay exactly the same as it is now, that's exactly what I would do. Okay, guys, that's what the plan is for tomorrow. 1 cash secured put on QQQ, 1 cash secured put on the SPY, and then we'll debate whether we run it on Amazon or Oracle cash secured put. However, I'm definitely biased towards Oracle at this time. And yeah, that wraps the video, guys. Hopefully you guys are staying locked in, staying harvesting. Matt out. I will see you in the next video, and it will be tomorrow.